Did you know that AI can predict stock market trends with up to 80% accuracy in some cases? That's right. Artificial intelligence is no longer just sci-fi. It's changing the way we make money. Hey there. I'm obsessed with how AI is flipping the world of investing upside down. Picture this: making smarter trades, slashing hours of research, and maybe even banking some serious cash, all with the help of a super smart machine. In this video, I'm diving deep into how AI is transforming investing forever, from robo-advisors that manage your money to predictive algorithms that spot winning stocks before they soar. Whether you're a total beginner or a seasoned trader, I'm breaking down the tools, strategies, and exact steps to get started. Plus, I'll share some insider tips to avoid pitfalls and maximize your gains. Stick around, because by the end, you'll be ready to harness AI to grow your wealth like a pro. Let's jump in. So what exactly is AI when it comes to investing? Imagine having a tireless, super intelligent assistant who can read every financial report, news headline, earnings call, and market trend in seconds, something no human could ever dream of doing. That's AI, or artificial intelligence, in a nutshell. At its core, AI uses something called machine learning, where it crunches massive amounts of data to spot patterns and make predictions. For example, it might notice that a stock like Nvidia tends to spike every time a new AI chip announcement hits the news. Or it could pick up that retail stocks, like Walmart, jump when consumer sentiment on platforms like X is overwhelmingly positive. It's like giving your brain a turbocharged upgrade. AI in investing comes in a few flavors. You've got robo-advisors, which act like your personal financial planner, building and managing a portfolio tailored to your goals. Then there are trading algorithms, which execute lightning-fast trades based on data patterns. Think hedge funds raking in millions in a single day. There's also sentiment analysis, where AI scans social media platforms like X or news outlets to gauge public mood about a company. And don't sleep on risk management. AI can flag potential losses in your portfolio before you even notice a dip. How did this all start? The roots of AI in finance go back to the 1980s, when early trading algorithms were used to automate basic stock trades. These were clunky, like riding a bicycle with training wheels. But fast forward to today, and machine learning has turned those bikes into rocket ships. With access to cloud computing and massive data sets like stock prices, economic reports, and even tweets, AI can now predict market moves with jaw-dropping accuracy. For instance, studies from firms like Numerai, which we'll reference later, show AI models hitting up to 80% accuracy in predicting crypto price trends. That's the kind of edge that makes investors sit up and take notice. All right, let's break down how AI is shaking up investing in some seriously cool ways. First, let's talk robo-advisors. These are like having a financial advisor who never sleeps, doesn't charge an arm and a leg, and uses data to make decisions. Platforms like Betterment and Wealthfront ask you a few questions about your goals, say saving for a dream vacation or building a retirement nest egg, and their AI builds a diversified portfolio of stocks and bonds tailored just for you. The best part? They rebalance your investments automatically so you don't have to stress about market swings. And the fees? Often as low as 0.25% a year. Compare that to the 1 to 2% a human advisor might charge. Next up, algorithmic trading. This is where things get wild. Big players like hedge funds use AI to analyze thousands of data points. Think stock prices, global economic indicators, even weather patterns that might affect crop stocks, and execute trades in milliseconds. For example, in 2023, a hedge fund called Renaissance Technologies reportedly used AI-driven models to generate billions in returns. That's the kind of power we're talking about. But it's not just for the big dogs. Retail investors like you and me can now access similar tech through platforms like TradeRiser, which delivers real-time trading signals. Then there's sentiment analysis, which is like having a crystal ball for public opinion. AI tools scan platforms like X, Reddit, or news sites to gauge how people feel about a stock or company. Let's say there's a flood of positive posts about Tesla's new electric truck on X. AI might predict a stock price bump based on that hype. A 2024 study from MIT showed that sentiment analysis tools could predict short-term stock movements with up to 70% accuracy for high-profile companies. That's huge. And let's not forget risk management. AI can spot red flags in your portfolio faster than you can say market crash. For instance, it might notice that your heavy investment in tech stocks leaves you vulnerable to a sector-wide dip and suggest diversifying into, say, healthcare or utilities. It's like having a financial bodyguard. Historically, AI's been a game changer here. Banks like JP Morgan have used AI since the early 2000s to flag risky trades, saving billions in potential losses. So how did we go from basic algorithms to this? Back in the 80s, early systems could only handle simple buy or sell decisions. But with advances in computing power and data availability, AI now processes petabytes of information, from global trade data to consumer spending habits. It's like we've gone from a flip phone to a smartphone in the investing world. Now, why should you care about AI as a regular investor? Because it's leveling the playing field like never before. Let's start with affordability. Hiring a traditional financial advisor can cost thousands of dollars a year. Think $2,000 to manage a $100,000 portfolio. With a robo-advisor like Betterment, you're looking at just $250 for the same amount. That's like trading a fancy steak dinner for a burger and keeping the change. Second, AI saves you time. If you've ever tried analyzing stock charts or reading through a company's 200-page earnings report, you know it's a slog. AI does that heavy lifting for you in seconds. For example, Wealthfront's AI can scan thousands of ETFs to find the ones that match your risk tolerance and goals, so you can spend your evenings binge-watching your favorite show instead of crunching numbers. Third, AI takes emotions out of the equation. Ever panic sold a stock when it dipped 5%, only to watch it soar later? We've all been there. AI nem fel vagimoho, merev, hideg, adatokos, ragash kodik. Studies like one from the University of Chicago in 2023 show that AI-driven portfolios outperform human-managed ones by 2 to 3% annually because they avoid emotional mistakes. And here's the kicker. AI tools that were once exclusive to Wall Street's elite are now available to everyone. Apps like Robinhood use AI to suggest stocks based on your trading habits, while Acorns rounds up your daily purchases and invests the spare change using AI-driven strategies. It's like having a hedge fund in your pocket, and it's as easy as ordering pizza online. But let's talk about who's using this tech. From millennials starting with $50 to retirees managing millions, AI is for everyone. Take my friend Sarah, a 28-year-old teacher. She started investing $100 a month through Betterment's robo-advisor. 2 years later, her portfolio's up 15%, and she didn't have to lift a finger. That's the power of AI. Accessible, effective, and beginner-friendly. But before you go all in, let's talk about the risks, because AI isn't a magic money machine. All right, let's get real. AI is incredible, but it's not perfect. There are risks you need to know about before you dive in. First, AI isn't foolproof. It relies on historical data to make predictions, but markets can be unpredictable. Take the 2010 flash crash. A glitch in algorithmic trading caused the Dow Jones to plummet 1,000 points in minutes, wiping out $1 trillion in market value before recovering. That's a stark reminder that tech can mess up. Then there's data privacy. AI needs tons of data to work. Think your financial history, trading habits, even your social media activity if you're using sentiment analysis tools. If you're not using a trusted platform, your info could be at risk. In 2024, a major fintech app faced a data breach affecting 7 million users, so always check a platform's security credentials, like two-factor authentication or encryption standards. Another risk? AI can struggle with black swan events, those once-in-a-lifetime shocks like a global pandemic or a sudden geopolitical crisis. If the AI hasn't seen something like it in its data, it might make bad calls. For example, during the COVID-19 market crash in 2020, some AI models underestimated the downturn because nothing in their training data matched a global lockdown. There's also the risk of over-reliance. It's tempting to let AI do all the work, but you've got to stay in the driver's seat. Think of AI as your co-pilot, not your autopilot. My advice? Always double-check AI's recommendations. If a tool like TradeRiser suggests buying a stock, take 5 minutes to read up on the company's latest news. And stick to reputable platforms. Look for ones regulated by bodies like the SEC, or with a track record of user trust, like Betterment or Wealthfront. So, how do you balance the risks and rewards? Start small, use secure platforms, and don't bet your life savings on a single AI prediction. Now let's move on to the fun part, the best AI tools you can start using today to grow your wealth. Ready to jump into AI investing? I've got you covered with my top picks for AI-powered tools that are beginner-friendly and wallet-friendly. Let's start with Betterment, the gold standard for robo-advisors. It's perfect for newbies. You answer a quick quiz about your goals, like saving for a house or retirement, and its AI builds a diversified portfolio of ETFs. It costs just 0.25% a year, and you can start with as little as $10. In 2024, Betterment managed over $40 billion in assets, so you know it's legit. Next up is Wealthfront, another robo-advisor that's great for tax-efficient investing. Its AI uses strategies like tax loss harvesting, which sells losing investments to offset taxes on your gains. If you're investing for the long haul, this can save you thousands. Wealthfront also lets you customize your portfolio, so if you're bullish on green energy, you can tilt your investments towards solar or wind ETFs. For active traders, check out TradeRiser. This platform uses AI to deliver real-time trading signals, like when to buy Apple stock or sell a lagging retail chain. It's like having a Wall Street analyst in your pocket. TradeRiser's AI analyzes market data, technical indicators, and even news sentiment to give you an edge. A 2024 user survey showed 65% of TradeRiser users outperformed the S&P 500 using its signals. Pretty impressive. If you're curious about sentiment analysis, Kavout is a must-try. Its AI scans X posts, news articles, and blogs to predict stock price movements based on public mood. For instance, if X is buzzing about a new Amazon product, Kavout might flag AMZN as a buy. It's got a free trial, so you can test it without spending a dime. And for crypto fans, Numerai is a game changer. Its 2024 white paper details how its AI models, built by a global network of data scientists, predict crypto market trends with up to 80% accuracy in certain conditions. You can invest in Numerai's hedge fund or use its signals to trade Bitcoin or Ethereum on your own. Pro tip: most of these platforms offer free trials or low minimums, so you can start with $50 or $100 to get a feel for it. My friend Jake, a college student, started with $200 on Betterment and now has a $1,000 portfolio after 2 years, all while studying for exams. If he can do it, so can you. So how do you actually get started? Let's break it down into simple steps. All right, let's make this super easy. Here's how to start AI investing in just a few steps. Step 1. Pick a platform. If you're new, I recommend Betterment or Wealthfront. They're user-friendly, affordable, and great for hands-off investing. If you're more hands-on, try TradeRiser or Kavout for trading signals. Do a quick Google search for user reviews to make sure the platform fits your vibe. Step 2. Sign up and take the platform's quiz. Most robo-advisors ask about your financial goals, risk tolerance, and timeline. Like, are you saving for a car in 2 years or retirement in 20? Be honest here. It helps the AI tailor your portfolio. For example, if you're risk averse, it might lean toward bonds over volatile tech stocks. Step 3, start small. You don't need thousands to begin. 100 is enough to test the waters. Many platforms, like Acorns, let you invest spare change from daily purchases, so it feels effortless. For instance, if you buy a $4 coffee, Acorns rounds it up to $5 and invests the $1 difference. Over time, those pennies add up. Step 4, let the AI do its thing, but don't ghost it. Check your portfolio once a month to see how it's performing. Most platforms send you easy-to-read reports, so you don't need a finance degree to understand them. If you're using a trading tool like TradeRiser, act on its signals but do a quick sanity check. Read the news or check X for chatter about the stock. Step 5. Avoid rookie mistakes. Don't chase hot stocks you see hyped on X or Reddit. Those are often pumps and dumps. Stick to your plan and don't panic if the market dips. AI is built for the long game, like planting a seed and watching it grow into a tree. My cousin Mike learned this the hard way. He sold his Tesla stock during a 10% dip in 2022, only to watch it double in 2023. Patience is key. Want a real-world example? My neighbor Lisa, a single mom, started with $500 on Wealthfront. She set her goal to save for her kids' college fund, and the AI built her a portfolio of 60% stocks, 30% bonds, and 10% real estate ETFs. 2 years later, she's up 12%, and she's added $50 a month to keep it growing. That's the power of starting small and staying consistent. Ready to take it further? Let's talk advanced AI strategies. If you're ready to level up, AI can take your investing to some seriously exciting places. Let's start with options trading. Options are contracts that let you buy or sell a stock at a set price in the future, and they're a way to amplify your gains or losses, so be careful. AI tools like TradeRiser analyze thousands of options contracts in seconds to find the best ones for your strategy. For example, its AI might spot that call options on Microsoft are undervalued based on upcoming product launches, giving you a chance to profit big. Then there's crypto, where AI is making huge waves. Platforms like Numerai let you crowdsource predictive models from thousands of data scientists to forecast Bitcoin or Ethereum prices. According to Numerai's 2024 white paper, its AI models achieved up to 80% accuracy in predicting short-term crypto trends by analyzing market data, blockchain activity, and sentiment on platforms like X. You can use Numerai's signals to trade on exchanges like Coinbase, or even invest in their hedge fund for a hands-off approach. If you're into real estate, AI can help there too. Platforms like Roofstock use AI to analyze property data. Think rental yields, neighborhood trends, and economic indicators to find undervalued real estate investments. I know a guy, Tom, who used AI to spot undervalued REITs, real estate investment trusts. In 2024, he invested $5,000 and is already up 20% this year. Feeling nerdy? You can build your own AI algorithm if you know a bit of coding. Platforms like QuantConnect let you design trading algorithms using Python, and their AI can backtest your strategy against years of market data. Imagine creating your own money-making robot. For example, a coder friend of mine built an algorithm to trade small-cap stocks based on earnings surprises, and it's beaten the market by 10% annually. Not ready to code? No worries. Stick to platforms like Kavout for AI-driven stock picks or Betterment for automated portfolio management. The key is to experiment with small amounts and learn as you go. Advanced strategies are like learning to drive a race car. Start slow, practice, and don't crash your savings. Ready to make AI your investing superpower? Let's wrap this up. So there you have it. AI is revolutionizing investing, making it easier, cheaper, and smarter for everyone. from beginners with $100 to seasoned traders chasing the next big win. Whether it's robo-advisors like Betterment managing your portfolio, trading tools like TradeRiser giving you real-time signals, or crypto platforms like Numerai predicting Bitcoin's next move, AI puts Wall Street-level tools in your hands. Start small, pick a trusted platform, and don't be afraid to experiment. Think of it like planting a garden that grows over time.